everyone. My name is Ben DiCostanzo. And before we get started, we thank God for this presentation, for this day. We've never seen one like this before. And we thank you for being a part of this presentation. We're here always to inform, to educate, and guide people every step of the way in our profession. Our services are real estate, mortgages, excuse me, and we're also a 501c3 charity. So we're pretty diversified. Why are we diversified? Because that comes with 52 years I've been in this business. And we got so much to share for you, but we got a topic today, and that is buying a house. Actually, I put buying a home. That sounds a little nicer, out there. And no one is left out. So if you're buying a home, you really want to stay focused on this presentation, no question about it, because so many people come in, and all the years I've been doing it, I spend so much time with the buyers that really helped me network and get all the recommendations at this time, in my life. But we're working with a lot of people that are young, mid-age, seniors, retired, and looking for another opportunity. And that's what we got to key in. So if you're a real estate agent, you're a broker, you're a loan officer, you're an attorney, you're a title company, you're an accountant, whatever profession you're in, they're not building any more land. So you need a headquarters, and many people just, need a roof over their heads. And that's what we're here to talk about. So you heard the topic, I'll just say it over and over again, buying a home. So wherever you're at right now, this is very important information. And you might have heard us say a lot of different things, but I want to recap some of the things in our training and a little more information, okay? And that is C.I.A. C stands for your credit. Again, you want to write everything down that's possible. You want to record it, you want to tape it, you want to put it on your iPhone, and get this information down. Credit, number one. I mean, there's no 1, 2, 3. We got 1, 2, 3 here. Credit, income, and assets, the C.I.A. But credit means so much, because you might have pulled a soft pull. It means there's no inquiries or no real hits. Your score ain't going down. There's so much information that you hear about credit. We're live, New York City and Brooklyn and all the boroughs. You may hear phones, you may hear noise out there, but you should hear us clear enough. Credit is extremely important, because it's not like the old days, and I'm not talking real old days, the 1990s, when there were non-conforming loans. Under 2006 and 2008, there's been many changes in the mortgage industry. It kind of almost changed for life, the way things are going, and we have to learn history about what programs may be coming back. But you see, if you pull a credit and you hear your score, maybe it's good, maybe it's not that good, but it's very important for you and your family and a loan officer, a real estate agent, to know about credit. Just because you hear a number, that doesn't mean you're going to be approved. So we want you to think today, like the buyer you are, like the real estate agent, whoever you are, okay, about certain things. We want you to think also like a processor and an underwriter of all the things that are needed when you buy a home. C is credit. So an underwriter is not looking, they're looking at numbers. That's one of the first things. And if you hear numbers and you learn about numbers, a 700 is a pretty good score. But a 700 with only one piece of credit is not enough established credit to buy a home. You have to research. You have to know what could do a little more, and maybe you're not going to fit into that conventional program. However, maybe you'll fit into a government insured program with one piece of credit. It's what we call alternative credit that will make the deal. We're here to help you secure your position and be ready and to be pre-approved and approved to close the house that you're looking for. Okay? So many people in the 1970s, they were coming from all around the world, came to me. I was new in the business, but I learned how to put deals together because I was very motivated to sell that home. And people were very motivated to buy a home. And there's a lot of different stories that we can share together that will help you. Okay? So C for credit, underwriters are typically looking for 4 pieces of credit. But, I mean, we could spend a lot of time on credit. No question about it. But 4 pieces of credit is pretty good credit. But even though you have 4 pieces, maybe you just opened them a month ago, a year ago. So there's not a long history of all the credit you have. But one thing about credit is good credit could come about as soon as possible. And bad credit, after some time, it does go away. Certain things never go off for credit, like a judgment. But certain things do go, there's forgiveness when it's a while over 2 years back on credit. So what are you looking for to buy a home? How many pieces of credit? About 4. Okay? 3, 4, 5. But another thing here is I had someone that was really looking to improve their credit, and they went out and got 25 credit cards. So when an underwriter looks at 10 or more or 20 credit cards, they're going to say, wow, you got more of a chance of going bankrupt, and there's too much credit out there. So what is your dream? What is your mission? What are you looking to do? Looking to buy a home? You're looking to be a real estate agent, or you're looking to do loans? Understand credit as much as you could. So when credit was just established, that's a question. And if you have a credit card for 20 years, maybe that's not the card you want to close when you open up credit. Because the longer you have the card, the higher your score is going to be. I see one of our associates here is waving their head because we're live and people can bring on questions. If you want to answer a question right away, that's fine. Okay? Questions are really good. Take your notebook down, take your pad down, and ask that question. So understanding high credit, low credit, understanding balances and payments, because in real estate there's what we call a front end and a back end. The front end means you don't have liabilities. There's 2 columns here. Okay? 2 columns, the A column, and let's call it the B column. The A column is assets. The B column is liabilities. I'm just going to abbreviate. And that's what we call more of the back end of understanding what ratios are. But right now we're talking about credit. How important credit is, okay? In the old days, if you had, and I don't mean just keep saying the old days, I come from some of that, but I'm in the new days and the new times, and we're working with a lot of people of all ages. I'm going to talk about that. Yes. Okay. Credit, 4 pieces or so, right around there. If you have 1 piece of credit, you may not fit under the conventional program. You may have to go with an FHA program, the Federal Housing Administration. We're excited about this opportunity that we hear about. So a loan officer, an underwriter is going to look at when the credit was open, and they're going to look at, I'm going to take this off the board for now. Let's call this a Visa card, a MasterCard, a Discover card,
American
and an American Express card. There's going to be a column here, and one side is going to say the high, and one side is going to say the balance. We're really becoming really schooled for the buyer that sees their credit, for the real estate agent, and anyone that's in the mortgage business want to understand this a little more. That's why we're training many people that are looking to become loan officers, which is a great career. But the topic is buying a home, and it's including everyone that's in this business, okay? So high credit means Visa said, we'll give you $3,000. Master said, we'll give you $1,500. Discover said another $1,500. American Express said $5,000. Now look, when we evaluate credit, when you evaluate your own credit, put down your cards, write a column up, take your notebook out, and write it down. And high credit is how much Visa said you're okay with borrowing, okay? But other things may say 300, 500, 300 again, and another 500. Okay, American Express, we know usually gives you a lot more than that, okay? But looking at the high credit, that's the most the company is willing to give you. That means they're evaluating your income, the information you have given them, and saying this is what we'll give. That's a little bit different than buying a home. This is like low amounts. This is some nice amounts. It's not big amounts, okay? But now the balance, watch this. If the balance is $2,500 on this one, $800 on this, $1,000 on this, and $2,000 on this. Excuse me. You know what? If I'm looking at this credit, it's not going to be as high based on the high credit, excuse me, and the balances. So now, let's say there's other things going on, it's in the low 600s. You want to get this score up? Fantastic, you can get it up, okay? We're going to say, can you pay this down? Anytime you can get under, I'm writing that down here, under 50%, wow. That means I'd have to put over $1,000. I'd like $1,100 payment on this. I'd like a $200 payment on that. I'd like a $600 payment on that, and this one I could leave alone. Because it's under 50% of the loan amount of the credit. And all of a sudden, there's a program you could look up to get your credit up in 4 days. It's like rapid rescoring.
Yes.
There's a computer system for it, and you could get your credit up in no time. So we want you to buy a home. Oh yeah, we'd like to sell you a home, okay? And we'd like to do the mortgage for you. No question about it. I mean, so we're not here to sell you like any programs or anything. We're here to give an education to people that want to buy a home, and give us a call for a free consultation at any time you like to call us, okay? And C for credit is very important. How to learn that, how you take an official report. Now you can get a free credit report by calling up one of the 3 major credit reporting agencies, Experian, TransUnion, and Equifax. Call them up and say, please send me your report. They're going to send you a whole official report. Now in credit, there's 3 scores. Experian, Equifax, okay, TransUnion, and all the companies that are out there. But those are the 3 major companies that banks look to get information from. A qualified reporting agency. Now there's 3 scores. Mayor, you see her there. We need room on the board. That's why we love the board. And sometimes all the PowerPoints are coming your way. We have many of them ready to go. But there's so much information to give. That's why it's important you stay with this to as long as you could. You may come in, you may come out, but staying with this is where we're at. Helping people buy a home anywhere in the United States of America. We'll talk about that, okay? So, there is the three scores, the low, the middle, and the high. So let's say we have a low of 620, a middle of 650, and a high of 680. Okay? Well, they're not going by the 680. They're going to go by the low and the middle, but the middle's going to really qualify. Okay? And you hear different banks and different lenders tell you different information. The bank may say, I could take 580. They're going to take 580 because they're going to think about getting you up on a rapid rescoring. They're feeling they can get you up, okay? 620 at our bank, we're a direct lender, can help you get a conventional loan, okay? But the higher you could be, you want to be at least at 680 and up, because there are special programs for people buying a one-family home that has 680 and up. And when you're in the 700s, you're good. But it's not one piece of credit. You want to have at least 4 established credits. Not only credit cards, you can have a furniture loan, you could have a car loan, you could have a mortgage on an investment home, a primary residence. You might have bought a home and sold it and the mortgage get paid off. So there's so many things. I could go on and on with credit. But you could become an expert if you're in the business of helping people buy a home or helping people repair their credit with no money. Because something bigger than that is going to come true, for you. I got to tell you, we thank God here. We thank you. They're so important to us. We thank the people that are in this room right now that may have questions. We have somebody coming in to buy a home now. They want to sit down with some of our agents and associates here. We're waiting for them to come through here. So there's a lot to share about buying a home. So high credit, middle credit, and low credit. Know your middle score and know where you can go up from that, and know how you can help yourself just by being at these presentations and how to get your credit up. So if you have so much credit, like I said, you had a car loan. How many cars did you have on a loan? Now, wait a second. If you're buying a home, I can't tell you in my lifetime how many people were buying a home and they went out and bought a car. I don't want to say it's a no-no, but yeah, it's a no-no unless you really have the income and you understand about buying a car. If you buy a car and you get a $500 car loan and you just bought it, times a car loan times 12 months, this is per month. This is 12 months in the year. And what's 500 times 12? Who knows their math?
6,000.
She's good in math. So far, so good. Thank you. $6,000. It's an easy, kind of easy. And I don't want to say it's easy. But that's $6,000. If you're making $75,000 a year, they're going to take that $6,000 off of your credit, or for your income, I should say. Mm-hmm. Now you're down to 69. And then if you have high balances, they're going to take that off the ratio when your number's about being approved for a loan. So C for credit is very important when you buy a home. You need consultation on it, you could give us a call. I put a number up there for you. You can call us with information at any time. We want to see if any questions are coming in. Take a look. How is the viewship going at this point, Deb, right now?
Looking good. Looking
Looking
good.
good? How many
No.
people can we let them know? We got 100, 200?
We had a good peak there for a little bit. Kind
Okay.
of
What was our high point?
I think it was around 100. Yeah, like 80.
Okay,
88,
we got the first 100
high 80s,
people
high
coming
90s.
on.
Yeah.
The longer we're on, more people will be coming on. That's important to us to always know numbers, because when you do your own presentation, you're going to look at likes, you're going to look at numbers and all those things that are very important. And you know what? We're here to all the associates we have. I don't know if we could do a minute and have you come up with a little Creole information. Can you give a minute on that?
You want me to?
Yeah, I want you to come up and just talk to people about what you know, that when you got your license, and how can you help somebody buy a home? What are you doing? Okay, give it a minute, think about it. Do you speak another language?
Creole.
You speak Creole too, Bone. Does Bone mean any? Am I saying that right? Good?
Okay, next time.
Next time for him? Okay, next time. We gotta get Watson ready. That's why we're live, that's why we talk, that's why we train. So buying a home is the topic today. Now, see? Law of mortgageability, it's not an official law, but it's a way that we understand law of mortgageability is C.I.A. C is for credit, I is your income. Let me give you some training on rates. Okay? There's an easy way to find out if you're getting a mortgage, how much it comes. If you use these numbers, $6 to $7, you'll be able to tell how much a mortgage costs in today's times. Do you know what today's rates are? I got an idea. I got to study rates every day based on treasury notes, based on what we call spreads and margins. And you can learn all you want about mortgages. But if you use these two numbers, 6 and 7, you can learn how much a mortgage costs. Because if the rate, this is such an easy formula, if the rate is 6%, it's $6 per every 1,000. So let me write that down with you. Let's suppose the mortgage is $100,000. Look at that. If it's $6 a 1,000, you know how much your payment is? $600. Now let's times that by 5. Let's change this to 500,000. You see all my writing here, folks? You see why we need a board? $500 times 6,000 is 5 times more than 600. It's $3,000 a month. Now 6% is a little lower now. We hope that we go to 6, but we're more like 6.5%, 6.75% today. Okay, and that's about $6.80. It's not $7. But if the rate went to 7.5, it's $7 a 1,000. So this mortgage could be between 600 and 700, 3,000 to 3,500. And that's how you tell what the rates are. $6 per down, go up a little bit. Go to $6.50, $6.75, $6.75. And now you know how to see what the rate is. Okay? So C is for your credit, I is for your income. So what a big word, not a big word, and an important abbreviation. Very important. I say it most of the times when we're training loan officers, when we're working with you to get into the mortgage business, or you're a real estate agent and you're going out and showing profit. The key words, I would write this down for everyone to write this down, is pity. P-I-T-I. You know what that stands for?
Principal, interest, tax, and insurance.
Well, I can see somebody's here in the real estate business. Not everybody knows that. You know what it is now?
Yeah.
What is it?
Principal, interest, tax, insurance.
Yeah. So, you see, when people use the word payment, payment isn't the best word to use. I got a lot of payments, but I call them investments. So principal is how much you borrow. If you borrow 500,000, I'm gonna go up now. Look at that. And the mortgage is $3,200. Well, your principal is 500 grand. That's the principal. Let me change that. Let me put back the payment, $3,200. This is an example. That's it. I'm coming up to understand what pity is. Principal, interest, taxes, and insurance. Yeah. And let's call that the investment every month, or let me give it to you boldly, it's the payment. But there's so much you could do with payment on buying a home. You might not have heard what you needed to hear because everybody's too busy. But one thing at this training is we take our time in really getting people familiar with certain things that bring an advantage. So agents got to bring you that advantage because you got to do business with them because you like them, you trust them, and they see where you're going. Right? Interest, well, the 3,200 is going to cover both the principal and interest, but that 3,200 in the first 10 years is mainly 90 to 95 to 99% all the interest that you pay on the loan. So let me just break down principal and interest. Learn what an amortization table is. Oh man, I'll tell you something. Anybody that gets a mortgage, you know what people don't do? They don't know because they haven't been told. They don't get an amortization table. I'm going to order an amortization table and break one down on one of the houses I get so there's no conflict here. Okay? So out of the 3,200, watch this. I'm going to come here and I'm going to say payment 1, payment 10, payment 100. If you take a 30-year fixed rate loan, Watson, listen to the question. If you take a 30-year fixed rate and you're buying a home, the people are buying a home, they take 30 years, how many months is that?
I don't want
360.
20,000 is 360. 20 times 12.
Oh, I like her math a lot. If you take a 30-year loan, you have to make 360 payments. And if you understand what payments are, let me tell you something, you're going to get an education you never heard of. Because nobody's taking the time for you to understand an amortization table. A 30-year loan is 360. How much is a 15-year loan? How many months?
3 more than
180. Half. How much is a 10-year loan? 120. So you could tell that if you go from 30 years to 15, your rate's going to come down, but the payment's going to go up. So it's harder to qualify. You can't just say, I don't mean to say this, but you just can't say, give me 15 years. You gotta know numbers. You gotta know what pity is. Principal, interest, taxes, and insurance. I know we're getting a little passionate here, but we're feeling the excitement of working with you, the people. Very important. You got a question, man, just type it in and we're watching. So I got to thank my staff here that we got some lights on, we got the camera on, and we're just talking about training people to do a little bit more we're training you. We're not sorry to say that, but we're giving you information about buying a home, a house. And there's so much more you can learn about high cost areas, FHA loan amounts, front end and back end ratios. I mean, we have a half hour, 40 minutes, and that's it. It's not enough time. But yes, it's enough time to get that one seed that's going to help you move forward and make that dream a reality. So payment one, watch this. We have the principal. On payment one of $3,200, watch this. The principal is going to be $3,192. This is an example. That's why you want to understand an amortization table. When you learn this kind of financing, you don't learn this everywhere. So what I'm saying is, $3,192 is interest, and $8 is toward the principal. So if you want to know how much do I owe after I just gave the bank $3,200, after 1 month, you owe the bank $499,992.
What?
Did you see this number, folks? Did you see that? Learning an amortization table, let me tell you, you could work some magic on buying a home. And that's what I learned after all the years I've been in business, and how I take the time personally to sell you a home and give you valuable information that you didn't hear before. And yeah, some people know about it. I understand. I appreciate that. Okay. Now you make your 10 payment. Now 10 payments at $3,200. You just gave the bank how much? $32,000, right? 10 times 30. You just gave the bank $32,000 in your first year. The year ain't over. So now, if you took $32,000, yeah, we're going to PowerPoint some of this, off this, that means you owe the bank
418.
$468,000. If you were paying no interest, 0% interest, and you gave the bank after 10 months, the year isn't up, you gave the bank $32,000, you owe them $468,000. No. But how much do you really owe them? Watch what we're telling you. This information is live. Okay. I'm going to give you an idea. After 10 payments, you paid $120 off. You now owe the bank $49,880. You see this? You gotta learn this. Learn the numbers. Do the numbers yourself. $500,000. I took 120 off the P. The P, look at this, is the principal. Okay? $31,000 in change is the interest. However, interest is tax deductible. That's why if you make a lot of money on your returns and you go to your account and says, wow, you guys are making $200,000 a year, it's time for you to buy a home. I know I put a nice number out there, but whatever it is, we make examples anywhere in the United States of America. That's where we do our loans. We do them mostly all the states. We're approved FHA lenders and VA lenders. Okay, so P, take the whole thing off. P and I is 3,200. the taxes. Now, throughout the United States of America, we go upstate, we go to Pennsylvania, we go to Jersey, we're in Connecticut, we go to Florida, from the East Coast to the West Coast. We have an idea on taxes. And one thing about taxes is they seem to always be going up, okay? So when taxes are a high cost in an area because of the location, what the prices are, that goes into your income ratios. The C.I.A, here's C.I.A, credit, income, and assets. We're learning adjectives, we're learning, abbreviations, we're learning what they all mean. Taxes, if they're $750 a month, how much is $750 times 12? 7 times 10 is 7,000. 7,600, something like that. Okay, $750 a month. Now, petty, principal and taxes, is insurance. This is interest, and this is insurance. And let's say the insurance is another example, $200 a month. So what we want the people to do is add up the petty. How much is your petty costing for your house? How much is your petty costing? Well, look at your statement, your payment or your investment every month on your principal and interest. Calculate your taxes and your insurance. At $200 a month for insurance, that's $2,400 a year. So I add everything up. How much does this come to, please?
For a year.
950, 4150.
The 150.
So 4150 times 12 months. That's how much it's going to cost you just for your principal, your interest, your taxes, and insurance. 4150 is about $50,000 a year.
49,800.
Okay, close.
50.
Call it 50,000. Times that by 3 and 4, and that's what you need to earn without really getting into ratios. Times 3 is $150,000 a year. Times 4 is $200,000 a year. So agents are learning how to help people buy a home. You just don't go out and look at a home. You need your pre-approval. And if you're paying cash, you need what we call proof of funds. You want to buy a home. You want the American dream to come true. That's what we're here for. To give an education, nothing more. So it's important that you like us, you subscribe, and you follow our program. We got some thousands of followers right now, and we're going to open up for questions soon, that you may have questions. We're a very active office. We've been around, you heard it, over 50 years, and we can help you buy a home any state in this country, in the United States of America. As loan officers, as real estate agents, we can hook up what we call referral business, and we can hook you up. Just with a consultation, just with information.
Right.
Yeah, last time we had close to 1,000 people live with us. We want you a part of it. You want to come in, you want to come out, that's a good thing. You know, it's a tough time, it's dinner time, it's things like that. But you know, one thing about us is we keep going. Time waits for no man or no woman, okay? Do not wait for the dead battery or the flat tire. Get a prevention checkup there, okay? Most of us believe that we can get more out of life. Are we satisfied with the house we're living in, the car we're driving, the clothes we're wearing? Do we want something nicer? is the amount of fun and free time we spend with our family. Is it enough, or could we use more? I always think about, would the quality of my life and the lives that depended on me ever be the same if we couldn't work anymore, or would it cause great hardship? Real estate you can touch, it's real. Okay? There's a lot of different people doing different things, and I believe in real estate. I like moving money fast, buying a home, fixing it, and reselling it. Yeah, buying an investment if you can able to do it. But if you want to move money quicker, there's what we call short-term and long-term. In IRS, for capital gains, again, I'm going to say that again, there's short-term and long-term. Short-term means under 1 year. It means you flipped the home. Taxes are going to be higher. Long-term means it's more than 1 year. You made your capital gains, and that's going to be a less multiplication of less money you're paying on your capital gains. But you know, a lot of people don't know this. There was IRS, I follow this because it's 50, I don't mean to keep saying I said it enough. Okay? But there's the 1997 Tax Relief Program. For the first time, the federal government stimulated people to buy a home in 1997, okay, and benefited homeowners by a one-time tax deduction. Oh, we're getting loud. Okay. One-time tax exemption. If you're a single person, you're getting tax-free money on capital gains of $250,000. You bought a home 2 years ago for $250,000 more, and that's just the profit. That's your capital gains. And if you had to pay taxes on that, you'd be paying about $75,000. But if you lived in it, you get a one-time exemption. And how about a spouse, a husband and wife, get a $500,000 exemption? That means my wife and I, we're in New York right now. We want to go to Florida, and we make $500,000 on a home. You make $500,000. Not here to tell you me. This is for us. Okay? And you make $500,000, and you're going with $500,000 plus the other money that you have, and you're going to live where you want to live with tax-free money. That just came about in 1997. You know, I study a lot of mortgages, and I got an NMLS license number, the Nationwide Mortgage Licensing System, and I took a course with a couple of mentors that were important to me, and I really respect it. I took a 20-hour course that took me 100 hours. So as an instructor, I really wanted to learn this. And let me tell you what I learned. In 1913 was the first time we established a Federal Reserve Bank. First time banking was like legal. In 1932, I studied my history. It took 19 years before we came up with amendments and changes. And it was called the Home Bank Act. And did you know that money was never insured? So you could have put your money in the bank, and if the bank went bankrupt, not likely with some banks today, but not too many years ago, a lot of banks went bankrupt in 2006 and 2008. But the first time we insured money was a lower amount, was with the Federal Depository Insurance Corporation, and that's called the FDIC. That was created in 1933. Now, changes to a secondary market for home buyers that hasn't heard this information, it's important. It's important. 1965, there were changes to a secondary market called Ginnie Mae and Fannie Mae. Ginnie Mae and Fannie Mae is a secondary market where loans are bought and sold after they've been originated. So if you learn this information, you'll see where to get your best mortgage, your lowest rates, and can save you thousands and hundreds of thousands of dollars on the program. In 1968, Freddie Mac, some changes to the secondary market there, and understanding that is so valuable you won't believe it. In 1974, I don't mean to give you all these dates, but there was compliance with law for the people to protect the public against, unscrupulous and incompetency. Yes. And that had to do with RESPA, the Real Estate Settlement Protection Act. Yes. And listen, we can go on with all the dates, okay? The first date for anybody getting, the last date for now, 2 more dates. The first date in the real estate book, if you want to become a licensed real estate broker, was in 1866. That we were doing our best back then to eliminate discrimination against against race. And it took us in the United States 102 years later to eliminate discrimination based on your national origin and your religion. Yeah. So dates are really key to learn if you're taking your test and if you like history. So you heard a lot of dates today, So I'm ending up the program. And let me recap. Buying a home was the topic today, okay? Understanding C.I.A, credit, income, and assets. Now, I didn't touch yet on the assets, but assets is liquid money. Money that could be turned liquid in like 3 days is what we call assets. So if you're looking to buy a home now, put that overtime in. Don't put more than your salary in there. Learn underwriting. Think like the underwriter. Agents, think like an underwriter. Processors, you want to become an underwriter. You want to earn more money. Buyers, you want to understand who's approving your loan to buy a home. It comes down to C.I. Learning front end and back end ratios and qualifying ratios. On a conventional loan, you heard the numbers 2836. Take 28% of your monthly income and use that not to exceed pity. If you're in that, you're way ahead. Oh yes, the numbers are up. So every bank has a different number depending on how qualified they are, how much loans they do, and what they do out there. Okay? C.I.A. 3.5% is the minimum down payment on an FHA deal and 3% on conventional. But if you're buying a home, you can add 6% seller contribution or seller concession that the price can go up or get that price, the seller can pay up to 6% on an FHA deal. But on a conventional deal, they can only pay 3%. And under an FHA program, if you only have $500, you could buy a home. You're going to need more money, but the rest of the money can come from a family gift. And this is what we learn by being in the business. This is what you learn. If you have the agents that are important to you, and you can ask all these questions when you go out. I hope it planted a seed and it gave you some more information. And the thing that we're closing up is also the pity. We're going to open up for questions now. I don't see if you see any questions, but please ask that question. Okay? Principal, interest, taxes, insurance, all the benefits, all the deductions. We close by always thanking God, thanking the people that are so important, There is a number out there. You may want to write this number down. Give us a call. Say hello. 718-266-9700. My name is Ben, and I want to thank you for being a part of it. God bless and have a good night. Okay. I got to do a quick